This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Thursday morning, chugging along to the end of the week. We are coming to you, as always, from the CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Morning, Nigel. And of course, at a time when, as they say, when it rains, it pours. So it's pouring good news. Today, you not only have good global cues, but you also have Brent that has fallen quite a bit. So I think all in all, it's a good recipe for the market today.
Well, that's right. In terms of markets, things are looking good. But, I was coming to work this morning. It appeared schools have restarted, so more people on the road as well. So the kids are back on par with us now. Quite a few schools are
Which also means one has to leave a little earlier. I mean, you've got to account for that traffic
that's true.
in the morning. All right. Well, the market is also starting to find a little bit of traffic, right, on the way up. And I think naturally so, it's done quite well. And now we are basically talking about nothing but all-time highs, at least on the Nifty, but other parts of the market are not firing. So let's just quickly take it from exactly there, what you need to know as we begin another session. US markets last night ended higher. You have the Nasdaq, which was up about 0.46 odd percent, 0.5%, by the way. S&P was up as well. Dow, Russell 2000. I mean, indices were all higher. You had data, the Michigan one-year inflation expectations actually rose to about 4.5%. Why is this important? This is, again, ties into the inflation story. The consensus now has moved to the fact that inflation is yesterday's story, rate cuts are tomorrow's story. And when I say tomorrow, I mean 2024. Markets are pricing some quantum of rate cuts in. Now, when you get data like this, which is the inflation expectation survey, right, showing that, the survey shows inflation to rise, that's a bit jarring. But, it's just one data point. It's jarring. It's it falls outside of the syllabus, so as to speak, but we'll see. You need more data points to build anything substantial or read something substantial off it. The 10-year was flat. Yesterday morning, you were saying that the 10-year ended down 2 basis points. This morning, we had to say it's up 2 basis points. Nothing, absolutely flat, 4.4%. By the way, the 100-day for the 10-year yield is at about 4.33. So we're pretty close now to important long-term supports as well. The dollar index moved up a little bit. We're just under the 104 odd level, which is, again, nothing substantial, so as to speak. Oil prices, last night before we went to sleep, they were down about 4.5 odd percent. But this morning, as we came back and we start today's session, oil prices actually are down just about 1% or so. There was actually a large recovery, intraday recovery, which we had, and we ended about 1% down. We ended just under $82 per barrel mark. So a plunge, but by close, it to kind of recoup some of those losses. The news is pretty straightforward. There was an OPEC meeting on Sunday. It was supposed to be decisive, more cuts, more players coming on board to kind of balance the oil market. That's not happened. Disagreement between big countries which supply oil. And the fear, actually, in a way, fear for oil producers, but good news for consumers like us, is that if the largest producer, which is Saudi Arabia, is unable to convince other players of the need for more cuts, you actually may see some reversals of existing cuts as well, which means more oil in the market, which means lower prices. But again, we'll see. Just one thing, US stock and bond markets are closed today, so no trading in Thursday for the Thanksgiving holiday. So just keep that in mind. So you won't have cues from the US and world markets when we come back tomorrow morning. Just to tie all of this back to our market here, the Nifty is, as I've been saying, stuck in a bit of a range. The resistance still, I would say, is the 19,850 to 19,875 levels, same levels that I put out yesterday as well. For all the up and down, and we had a fair bit yesterday, we ended just a little higher, which is good news. Nothing to take away, some 30 points up. Support for the Nifty comes in around that 40-hour exponential moving average, which has moved up a little bit. Now, that number is about 19,714, which is about 100 points down from where we are. The Bank Nifty is the real problem child here, and that broke below the low of 43,450 yesterday, and looks like we perhaps are starting a fresh leg down. It could head to my mind, targets of about 42,800 or so, which is not very far from where we are. But that's the weakest link in this entire chain of markets. For that to happen, Nifty Bank should not, on the upside, once again reclaim 43,790, which is yesterday's high. The Bank Nifty stays under it, looks a little weaker, and you perhaps have some more way to go, at least 1.5%, 2% or so initially. The small cap index, which has been the strongest of all indices, and we're talking about the broader market, that is also starting to roll over. It's the first signs. We've not had any pronounced continued weakness in the small and mid cap part of the market for a while now. But yesterday, the small cap index ended at the day's low. It was just a 1.25% cut. But the point is it's coming after a breathless straight up move. So I think, that I would say bears close watching. Could it be that, as the Nifty bank sort of does not participate very strongly, the Nifty is range bound and the broader market starts to weaken, the broader market starts to lend weakness to other parts of the market as well, the frontline indices as well. That's something we don't want to see. And that's why I'm saying that bears closer watching from here out. The GIFT Nifty will come up on your screen. And I think that is indicating a 10-point flattish kind of start. We're at about 19,895. Sonia.
So, I was trying to think about what the sort of overarching theme for this market is. And I feel like the market, the direction is positive, but the momentum is lacking a bit, right? After the kind of up move that we've seen, there's a little bit of a cooling off of the momentum. But having said all of that, this is definitely a positive market. So, just map it on the last many days. And the Nifty is up almost 1,000 points from the lows that we saw in the month of October. So, it's definitely a buy on dips market. And the trend is on the upside, but there's no great momentum. There's no great trigger at this point in time. In the last 6 months, it's an 8% rally that we've seen on the index already. The Dow is up almost 200 points overnight as well. The US 10-year yield has cooled off. The yield is now at about 4.36%. So this is the lowest that we've seen since September of 2022. And of course, we've been talking about how Brent crude prices have also cooled off. In fact, for the US equity markets, if you look at it, the month of November has been great so far. The Nasdaq is up 11%. The Dow is up about 7%. So the going has been very good. For our own markets too, domestic institutions continue to be pumping in money thick and fast. So you have about 720 crores that was bought in the cash markets yesterday. A couple of things to watch out for. There's so much traction in the primary markets, especially for what's happening with Tata Tech. So yesterday, you saw that phenomenal move on Tata Tech. It was subscribed 6.5 times on day one itself. And within hours of, opening, Tata Tech IPO was oversubscribed. The consumption stocks continue to be in focus. So Honasa's numbers were very good. The profits almost doubled. There was a 21% revenue growth. So that stock will definitely be in focus today. And yesterday's big headline, of course, was Titan, the last 48 hours, where Titan has hit that market cap of 3 lakh crores. And, it perhaps continues to see traction. It was up 1% yesterday as well. So all in all, a good move on the market, but we just need some more triggers, I guess, for the market to build onto its gains.
Well, it appears they're ready and the knockout punch is what is required, right? But yesterday, I think what was good, Sonia, is that we ended about that 19,800 mark. The previous 4 sessions, we went there thrice and we couldn't conquer that 19,800. So yesterday, I think that was one positive that I looked at. Now, today, the big question is, can the bulls go ahead and drive home the advantage? Things are looking up. Brent crude prices, yes, they recovered from the lows, but they're still weakish overnight. The 10-year yield as well as the dollar index, both of them are well behaved. And also, we're not going to get any shocker coming out of the US markets. Today they're shut, tomorrow they're open only for half a day out. So it's unlikely that we get a shocker coming out from US markets. So we're on our own terms. The Nifty will, the bulls will want to take the Nifty higher and in fact conquer those decisive levels, which we'll get to in just a bit. What did the FIs do yesterday? Well, they added more than 3,500 long positions yesterday. And that's why, in fact, now now you're seeing that there has been a fair bit of short covering that's taken place. So just pull out a chart, which should come up for you. 175,000 contracts were on the short side. That's come down to around 125,000 contracts. So we have already seen a fair bit of short covering on the index futures itself. And now the net shorts are at the lowest levels we have seen in the last, 1 month or so. That's the lowest level we have seen in this series. That's the November series. And that's one reason why the Nifty has gained close to around 1,000 points. So let's get to the levels. Recent high, 19,875. Well, that's the level that the bulls will have to conquer, because the bears appear they are protecting that level. We went yesterday closer to around the 19,700 mark, and from there we did see a good bounce of around 100 points. So near term, today we have expiry as well that's playing out. So that becomes the near term support out there. The Nifty bank. Now you pull up, a line graph, and the 20 and the 200 DMA, well, they're very, very close out there. So yesterday it ended closer around the 20 DMA. You don't want it to break that level decisively. So this 43,200 to around 43,500 becomes an extremely crucial support zone. And I say that because of the 20 and the 200 DMA, and also you see that move that we saw from late October till middle of November, we saw close to around a 2,200 point move on the Nifty bank. And then, you look at the retracement of that move. We should get those levels up for you on the screen. That level comes in at around 43,260. That's the 50% retracement of that 2,200 point rally. So that's an important level, 43,260 on the downside. And just one more point, the mid and the small caps, yesterday we saw some bit of underperformance. I think it could have something to do with what's going on even in, the IPO market, because maybe some liquidity is moving out there. And that could be one reason why we saw some kind of an underperformance coming in the small cap index. So we'll have to wait, I think, for a broader trend to emerge, say in the next 5-6 trading sessions, once these big IPOs are out of the way. But that's one point, I think, why the small cap index underperformed yesterday.
Okay, well, lots to talk about in the market in the next 2.5 hours. So let's get cracking very quickly. First up, we have some money market views coming in. Parul Mittal Sinha of Standard Chartered Bank says that the dollar INR saw a slight upward pressure and crossed a key resistance of 83.30 on a slight rebound in the dollar and uptick in oil prices last week. She expects the dollar INR to trade in a range of 83.15 to 83.38 next week, with the dollar expected to consolidate in the Thanksgiving week. She said the IPO-led inflows are also likely to support Forex.
Okay, on bonds, Parul says that despite a fall in global yields, domestic yields saw an upward bias post the weekly auction on factors like positioning, uptick in oil prices and fears of next CPI print, clocking 6%. She expects the 10-year benchmark bond to trade between 7.15% and 7.3% next week. Says that focus remains on the OPEC meeting while trends in global rates remains to be seen.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. For the time being, we just run you through the list. We have Honasa Consumer, TVS Motors, NMDC, Genesis, CE Info Systems, Shalby, and Welspun Corp. All of them on the back of positive news flow. While on the flip side, you have Interglobe Aviation, Cipla, and Walcher Nagar Industries that will be reacting to negative news flow.
Okay, well, the Harold van der Linde is head of Asia Equity Strategy at HSBC. He's joining us right now to take some questions. Harold, great to have you with us here. Thank you very much for your time. The 2024 outlook reports are all starting to trickle in. And the view, which seems to be the base case, is that we will get a okayish kind of landing in the US, the biggest market, and we'll get lots of rate cuts. What's the view as we kind of approach the end of the year, Harold?
No, I think you're absolutely right. So it's unreasonable to assume that we're having an immediate recession in the US. So a soft landing is a reasonable assumption to be made at the moment. I'm a little bit more worried actually about the bond yield story. So it's good that these bond yields have come down. And we've spoken about this over the last couple of months, that there would be a peak in these bond yields. Now they've come down from, say, 5% levels to 4.4 levels. So that's a substantial decline already. The market is pricing in low interest rates, but we really think that's going to happen in the second half of the year. So we're going to get probably some sense of confirmation of that in the first half of the year, maybe around February or March or so. Until then, we've already pricing in a lot of optimism on these bond yields. So there's probably going to be a bit of volatility coming out of that. So we need to keep a close eye on that. But if I look across the region, you've got decent earnings growth as well. India is actually a great example in that regard. Maybe not as strong as this year, 2023, but 2024 is going to hold up reasonably well. And that's going to support the Asian equities as well. But the core of the story really seems to be that for Asian equities and Indian equities as well, the global macro, which has been so negative for us over the last 2 years, starts to move in our favor.
Okay. Harold, hi, good morning, and thanks a lot for joining in. I wanted your thoughts on how you're approaching the IT space now, because, you have been a long-term investor in that space in India. Now the narrative is that cooling bond yields as well as the reduction of, so at least a receding recession in the US, or the fears of the recession are receding in the US, and all of that will perhaps cause a further upmove in IT stocks in India. Would you concur with that view?
Yeah, as long as we can avoid this recession story, then you would think that the growth outlook for exporters, which the IT sector in India is, right, is maybe muted. It's not going to be very strong next year, but it's not going to be extremely bad either. So that is somewhat supportive. In general, across the region, I think we've seen this trend towards moving towards the export sectors. IT in India, maybe to a certain extent, but also Korea and Taiwan have done really good this year. I think next year we're probably going to move a little bit more towards the domestic-oriented sectors across Asia, and probably India is not going to be a large exception to that.
Hi, Harold. Good morning. You've said it that structurally India is looking good. But, in the near term, we had this discussion the last time around as well, the toss-up between India as well as China. And now those US yields as well are cooling off. When that happens, you could see the emerging markets that participate. In the near term, do you think China could relatively outperform India at these valuations?
Yeah, I think that is a risk for India. So if you look, for example, the Indian market is open. If you look at, for example, the internet names that are trading in Hong Kong, so the Chinese internet names, they have just performed very, very well on the back of that. They're really sensitive to these lower bond yields. So as the global macro improves, that supports China a little bit more than India in the near term. But as I said, eventually it's going to come down to earnings as well. There, I think the story in India is going to be better. We've already seen a lot of that decline in bond yields. So a lot of that support for China probably has already been in there. Now, what you see in flows, though, is that people have moved money in the last few months from India. So we've seen foreign outflows in India towards China. They raised their weightings to China close to neutral. They've cut that a little bit again, actually, and moved to Korea and Taiwan and Japan because, the AI story and the DRAM story is not too bad in those markets. So that's where the money is. So I find it interesting as we go into 2024 that if, for example, China does perform very strong, let's assume that for the moment, and if money gets soaked in, does that then come from India or does that come from Korea, Japan, and Taiwan? And I suspect it might actually be the case that a lot of that comes from there and that people want to stay with India because the growth story there is pretty good. So we're betting on that scenario that India will be somewhat isolated from this, but we'll see if we're right on that front.
Although, Harold, one view is that because the structure which gets money and most markets get money through is the global emerging market cohort. And when that gets money, and China is still the largest weighted market, and when that gets money, everybody gets money according to the respective weight for countries. So would you agree with that? I mean,
yeah, absolutely. So
allocating money, taking away from a dedicated country, dedicated fund from this to that. I mean, it's largely, it comes into the global emerging market fund pool and then it kind of goes to various countries. Yeah.
So there are multiple flows at play. First of all, as bond yields decline, you see money going into equities globally. Within equities, it goes to emerging markets. Within emerging markets and Asia, it flows around as well. That's what I was talking about. That maybe comes from Korea and for example, and Taiwan and goes into China. But you're right. There's a lot of talk about emerging markets or Asian markets ex-China, that these funds are growing. They're growing rapidly, but they're still very small. They're less than 1% of total AUM. So they're not really making a massive impact yet. And I think there will be limits to that growth as well. But so you're right. If we see general money coming in, it will be positive for all EM markets. And that's what I mentioned. I think the global environment for Asian equities in general, and India is not an exception to that, is increasingly positive after being so negative over the last 2 years or so.
All right, Harold, we'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV 18. Let's take a quick break on that note. Lots of talk about the markets, but we'll drill it down to individual stocks when we come back. Our list of top 10 stocks is lined up in just minutes from now. Welcome back. Lots of stocks in focus. The first one on our radar is Honasa Consumer. All eyes were on that, especially, because of the Big Bang listing and then the expectations on numbers. But here is Mangalam to tell us how the numbers look this time around. Mangalam?
Well, after a Big Bang listing, you don't expect a company's first quarterly performance to disappoint, and that's exactly what has happened with Mamaearth as well. Good numbers coming in, 21% growth in the company's top line, but importantly, the street was eyeing operational improvement. Out there, the EBITDA has grown by 53.5%, margins coming in at 8.1% versus 6.4%. There was a one-off out there. Even if you adjust for that, it's close to 7.1%. Not a bad number indeed. The net profit has nearly doubled at around 29 crores versus 15 odd crores. The internals look strong as well. The company said like growth adjusted for Mompresso has been around 24%, which is nearly 3 times the FMCG industry. Underlying volume growth has been 27% as well. And they've expanded their retail reach to nearly 1.66 lakh outlets. The first half, ad spends have been moderated by about 265 basis points as a proportion of sales as well. And that has, led to their EBITDA margin expansion. Jefferies, which has initiated coverage on the stock just a few days ago, has actually, said that the management remains confident of driving 30% plus growth over the next, couple of quarters as well. And as a result of their margin beat, they've upgraded their FY24 earnings and EBITDA estimates by 5 to 6%. And they already had a 520 rupee target price on the stock. They've upped that to 530 as well. Though, remember, the stock has rallied from 260 odd rupees to nearly 360 rupees. So, see mild green on Honasa today.
All right, thanks a lot for that, Mangalam. Well, we'll also have the management who will be joining in at 9:40 a.m. later today. Let's turn attention to the auto stocks. Sonia, TVS Motors, they are foraying into a new market internationally?
Oh, yes, a couple of new markets. So, TVS Motor, if you've noticed the trajectory on the stock, it's hit a fresh 52-week high yesterday. And it's been phenomenal, the run on TVS Motor. The stock is up 60% this year. And the market cap of TVS Motor is now approaching 1 lakh crores. So, that's the kind of momentum that we've seen. Now, just to put it into perspective, TVS is expanding its global presence. It has entered the Vietnam market now. It's launched a range of two-wheelers over there. But not just that, a couple of days ago, it also entered into the European market and now is starting with the France market. So it's expanding its global presence, and the management has been very vociferous in its move in the export market. So currently, exports contribute 25% to its overall business as of Q1 of FY24, and the hope is to raise that further. This will also mean the EBITDA per vehicle for the company will go up. Remember, in Q2, the EBITDA margins were at a record high of 11.1%, and the management in their conference call said that the EBITDA per vehicle could expand further because of higher export presence. Let's look at two brokerages. UBS has a buy with a target price of 1,900 on the stock. Jefferies has a buy with a target price of 2,000 on the stock. Good tidings for TVS Motor.
Okay, all right. Good times for TVS Motors. It was expensive. It remains expensive, but the numbers have been looking very, very good. Turning attention to NMDC, where I spoke to the management a few days ago, and they told us here on CNBC-TV18 that there possibly be a price change in the next coming days. And sources tell me here at CNBC-TV18 that, in fact, yes, the price change is effective from today. It's effective from midnight itself, and it's effective both in Chhattisgarh as well as in Karnataka. Citi had come out with the note. They were talking about a near 1,000 rupee price increase in the coming months because of the strength we've seen in international prices as well as domestic steel production picks up. And the quantum that we have seen, it's across products. That means it's on lumps as well as fines. 200 rupees in Chhattisgarh, in Karnataka is around 300 rupees on. We reached out to the management, but no comment coming in from there. But, we are reasonably sure that the price hike has got affected. But Sonia, tell us about Interglobe Aviation. Some negative news coming in there?
I think it's just going to be a sentiment negative because there is a tax notice that they've got from the income tax department. And I think on the back of that, there could be a sentiment negative hit. The income tax demand is for 740 crores for the assessment year 2017 and 927 crores for the assessment year 2018. So the company has in the press release said that they will contest the same. They will take an appropriate legal remedy as well. This could be a minor hit on the stock. Otherwise, if you've noticed, the stock has done very well because passenger growth has been at an all-time high. Crude prices are down as well, down 4% overnight. So lots of positive triggers. I think this news will be a sentiment hit, but the market will overlook it and look at the other positives.
Okay, all right. Well, let's go across to Vivek. He's joining to tell us about Cipla. Vivek, morning.
Well, good morning. On November 18th, the company did tell the exchanges that they had received a warning letter status as far as the Pithampur, Madhya Pradesh was concerned. So now, we have accessed the warning letter that was issued by US FDA to Cipla. And some of the observations and some of the contents of the letter are quite serious. The US FDA has highlighted a couple of key concerns as far as this particular facility is concerned. They are highlighted data integrity issues along with various product complaints. Along with that, they've also mentioned that there have been similar as well as repeat observations even in the Goa facility. Remember, even that facility is under a warning letter status currently, and also has asked the company to go ahead and take help of third-party consultants to address all of the issues. Now, giving a quick timeline of events as far as the Pithampur facility is concerned, remember, February 2023, the US FDA inspected this particular facility, gave 8 observations in the Form 483. After that, in August 2023, they classified the facility as an official action indicated, and now the status has been upgraded. It's a more serious status, that is a warning letter. Now, what does it indicate? Most of the analysts on the street had expected this particular classification to come by, so most of it is already priced in as per analysts. Now, along with that, what we need to watch out for are 2 key product launches, that is generic Advair as well as generic Abraxane. Both of these launches will now be pushed out to FY25 as per analysts.
Okay, thanks very much, Vivek, for that. Let's focus on 2 more names. Don't talk about these very often, but Genesis and Mapma India, which I think we touch upon more often. Rima, hi, morning.
Hi, morning. So Genesis is a small IT company. Its market capitalization is about 1,350 crore rupees. Yesterday, the company's announced that they've entered into a strategic partnership with Survey of India. Now, Survey of India is India's national surveying and mapping authority. And together, the two plan to create not just maps, the 2D maps that we're used to, but 3D digital twins for major Indian cities and towns. Sorry, and eventually, I think one of the scope, the way they can expand the scope of this collaboration is sell this data, use this data as a product and sell it as a content, as a service. Now, the stock was already excited yesterday because it rallied close to about 17% in trade. Now we'll await to see more contours of the detail and the real opportunity. Now, Mapma India is the other one because the board will meet on Monday, 27th of November, where they will consider a fundraise via a QIP or pref. The company already has more than 500 crore of cash in the books, so this will be incremental. Maybe it is to boost their growth because the company had given a guidance of 40% plus revenue growth for the full year, but in the first half of the year, they're tracking a top line growth of about 28%, though H2 is typically stronger for the company, but there is that impending announcement about a fundraise. Back to you.
Okay, thanks a lot for that, Rima. In fact, we will have the management of Genesis International joining in at 8:35 a.m. later today, so do stay tuned in for that. Vivek is joining in to give us some more stocks that are in the news this morning. Vivek, what are you looking at?
Well, quite a few stocks on the radar on the back of news flow. First on my list, Shalby Hospitals. The company has said that it is now going to construct a 175-bed hospital in Santa Cruz, Mumbai, awaiting still more details on this particular construction that the company has given out. Welspun Corp is the other company in focus, the company that recently acquired Syntex Plastics. Now, Syntex Plastics has received the Odisha government's nod to set up a manufacturing unit. The company is looking to invest close to 480 crore to set up a CPVC as well as a plastic tans unit with a capacity of over 37,000 million tons. This particular project will be implemented over the next 3 fiscal years, and the company's chairman says that the foray into the PVC pipe segment will further strengthen our presence into the building material segment. The other stock on our radar is Walchand Nagar Industries, the company which has a facility in Walchand Nagar in Pune. Now there is a labor union strike that has been called. The company estimates that a loss of production, on back of this particular strike per day will be 1 crore. The company says that the strike has been called by the union to demand a wage settlement.
Yeah, all right. Thanks for that, Vivek. Well, let's do a quick recap of all the stocks we just covered. The ones with positive news flow: Hunasa, TVS, NMDC, Genesis, CE Info Systems, Shalby, as well as Welspun Corp. Well, stocks with negative news flow include Indiglobe Aviation, Cipla, and Walchand Nagar. Well, that's about stocks in focus, but let's hop across to Manisha. She joins us to tell us what's going on in the commodity markets. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, I'm looking at some profit taking across commodities, and that is ahead of the long weekend in U.S. It's a Thanksgiving holiday. And apart from that, we also have seen a jump up come in for the U.S. dollar index. That's back above 104. The 10-year Treasury yields also have surged, and that seemed to be putting pressure, especially in case of metals, where copper also has seen a decline of nearly 2% overnight. But a major chunk of decline really came in for the crude oil prices. At one point in time, we were down by 4%, settled 2% on the lower side. This is after the OPEC meeting was shifted to November 30th from November 26th, saying this is a statement coming in from Saudi Arabia that they are not satisfied with the oil production levels of member countries. Now, the markets are really contemplating on whether we are looking at deeper cuts, extended cuts, and that is what weighed on. And apart from that, the U.S. inventories also gained up by 8.7 million barrels, more than double than what the street was anticipating. So various factors weighing onto the markets right now.
All right, Manisha, thanks very much for that. We'll take a quick commercial break here. We'll come back. We have Deepan Mehta of Elixir Equities joining in to take us through what he's making of things. We'll also connect with the management of Genesis International Corp. That's an interesting company. And we'll ask him about the new partnership which Rima was telling us about earlier. Stay tuned.
Welcome back. A flattish opening is what we are bracing ourselves for because the gift nifty is suggesting that. But let's talk about stocks. Deepan Mehta, Director Elixir Equities, joins us on the show. Hi Deepan, morning. Good to see you in. Well, tell us about Honasa. What do you think about those numbers? Growth was good. Profitability appears to be improving, but at these valuations, what would you do? $350.
Yeah, good afternoon, Nigel, and thank you for having me on your show. Yes, I think the management certainly has surprised the street, and that's very good news post-listing that a company should report such strong numbers. But let's look at the sustainability. I think 2-3 more quarters of similar type of growth rates, which I mean 30-40%. And it would be in that zone, which I would say is reasonable and with a bit of a margin of safety, assuming the price remains at these levels. So it still appears to be expensive, on a trailing 12-month basis, or if you were to analyze these quarters' numbers. But it's more like work in progress, and let's see how the follow-through comes through for the next few quarters or so.
Okay, that's on Honasa, so that's work in progress. Dipan, hi, good morning. I wanted your thoughts on the Tata Tech IPO. Now it's already oversubscribed quite a bit, right? 6.5 times on day one. So looks like allotment is also going to be very limited. But post-listing, once it's expected to list at a premium, despite that, would you advise investors to buy?
Yeah, good morning, Sonia. I think let's look at what the listing price will be. And, 30-40%, 60 up to 50% higher than the price it is, which the IPO is. I would still say that on a long-term basis, that may still give good returns per se. But, such companies are best bought 3, 6 months, 12 months down the line, when we have seen 2-3 quarters and all the initial euphoria around listing has died down. No doubt it's a great company, and it outperformed its peer group when actually the going was pretty tough for the IT industry. And if you look at the entire spectrum of all the verticals in the IT sector globally, auto is one of the strongest in terms of tech spend. So a lot of positives for Tata Technologies. But I just like to wait and watch and see what the listing price is, and see how the quarterly numbers also come through for December and so on, and then make a more informed guess.
Dipan, just one quick word on the Murugappa Group names, which all surged. The news, of course, was on CG Power. They're venturing into this OSAT business, which is late stage, I think PCB board testings for semiconductors. But look at CG Power, which was locked up, Tube Investments, Carborundum, just flew off the handle. Any thoughts here?
No, I think these are quiet performers, low profile South-based company, but great value creators. And they tend to focus on specific verticals, and they become market leaders over there. On the whole, I think all these steps, the way Tube Investments acquired CG Power and how they turned it around, is really one of the best turnaround stories in India, and how much value they have created in CG Power. Also, it was a penny stock, and it has grown multi-fold and one of the best multi-bagger stocks as well. So it's as a group, I think they do phenomenally well, and we like their capital allocation policies as well. They never got into any debt trap or any corporate governance issues as well. So I think from time to time, investors could consider these stocks if they're available at attractive valuations. But as of now, I think whether it's CG Power or Tube Investments or Coromandel Universal, they're all trading at rich P multiples.
Okay. I wanted your thoughts on a couple of these companies that we're going to talk to right now. So Genesis International is one of the stocks on our radar. Dipan, just stay on for a bit. We'll come back to you. Very interesting discussion here. Survey of India and Genesis International have entered into a strategic tie-up for 3D digital twin mapping program in India. Now, Genesis specializes in advanced mapping, as we know. The company, though, has not been doing that well in terms of its earnings for the last 2 quarters. Losses have piled up. So more on that in a bit. But to discuss more on this and the opportunity ahead, Sajid Malik, the Chairman and Managing Director at Genesis International Corp, is with us. Sajid, thanks a lot for joining in. Appreciate your time here on CNBC TV18. If you can just share a little more details about this strategic tie-up that you have. What is the investment that's required? What is the kind of revenue opportunity that we're looking at?
So, as you know, that we have been working on creating the India map stack. And this involves creating not just the 2D map layer, which is the conventional map layer, but also including the 3D dimension to it, which has engineering grade applications and markets which are related to the needs of several verticals. So over the last 1.5 years, we have been in investment mode, really, and in terms of creating the content. So I'm happy to say that we've reached a stage where we have created the 2D map content for the entire country. We have done Additionally, 1 million kilometers of street imaging, street view as it is typically known, for more than 1,500 towns and cities. And we are capturing 3D in several cities in this country. So buoyed with that, we are proud to say that the Survey of India, which is the national mapping organization of this country, is now partnering with us in order to create this and co-create those digital twins. So we really have been, as I mentioned, focused over the last few quarters on an investment mode.
Sure.
Sajid, and we, yeah, sorry.
Could you give us some? Sorry, could you give us some numbers? What is the kind of investment that you will make in the next 1 year, and what is the kind of revenue opportunity that you see?
So we would be investing in upwards of around 200 crores in the content that we are developing.
Okay.
In terms of revenue opportunity, you need to remember that India is a large country, and thanks to the new geospatial policy, which was announced last year, which kind of spurred our content program, it is envisaged that just the markets in the infrastructure and in the urban space would be in the region of around 10,000 crores a year.
But hi, Mr. Malik, good morning, and thanks so much for joining in. That's the big opportunity. But, for you as the company, for Genesis, what kind of a revenue opportunity does it throw up? Or is this 10,000 crores the entire pie that you can do over a span of, many, many years?
No, this is actually, Nigel, the annual size, which is estimated by the government and by industry sources. You need to remember that prior to this industry did not exist. I mean, this data was not made available. It did not. So this is really the birth of the industry. And this is very much in line with, international trends. So if you were to look at a country of our size and which is having the largest urban population, the largest trend of urbanization, I won't be surprised if those numbers are met.
Okay, let's get to the growth numbers then, Mr. Malik, because, the delivery till now has not been up to the mark. If I looked at FY23 as well, it wasn't even 200 crores. The street was bracing for a higher number. For this year, that's for FY24, give and take this, this new venture that you've signed, what kind of a number can you end at? Even at the half-year mark, it's a degrowth. So FY24, what kind of revenues do you do? FY25, what kind of revenues do you do?
Right. So as you know that we've not been giving guidance because of the fact that we are actually in the middle of creating the platform. So we would be in a better position to do so in a couple of quarters from now.
But will you at least grow for this year? That's FY24 in comparison to FY23?
We expect to do much better in the second half of the year. Yeah.
Okay, and just a quick question, that 200 crores investment that you
also need to remember that, we use aircrafts and we use a lot of other sensors, which have a certain amount of impact on the seasonality of what we do. So during the monsoons, there's a bit of a slowdown. So stuff like that does impact our earnings.
But you're saying you'll end this year, you're expecting this year to be some growth in comparison to last year. Just final question from my end. 200 crores is the investment you said you're going to be making. There are some outstanding, warrants that you had issued to Malabar and the likes. Will they be converting? Because the share price currently as well is much lower than that. So will that take care of bulk of this funding?
It's hard for me to answer that question because it's up to the investors.
Then how do you fund the 200 crores, sir? Then how do you fund the 200 crores?
We have the internal resources to do so.
Mr. Malik, hi, good morning. Sorry, we're kind of doing this backwards, but for a lot of our viewers are uninitiated in terms of what you do actually. So just
right, and that's a good question.
Should we compare you to say a MapMyIndia? Is that a correct comparison?
Well, MapMyIndia is in the same space as we are in. We are building a similar platform, but we are also building the 3D platform along with it. So the markets that we are addressing go beyond the conventional navigation, e-commerce, logistics space, and we are also addressing the infrastructure space, which is really the much larger opportunity which is there. See, when you talk about mapping, it's as wide a space as, say, financial services. Most people are familiar with maps in terms of what they experience in the consumer apps, in e-commerce and the likes. But there are a host of large markets which actually require mapping data, which are way beyond pure consumer-driven applications.
So you okay? Fair enough. Mr. Malik, what we'll do is we'll have you
So
back.
hence really the partnership is Survey of India, right? I mean,
Got it.
the mandate of the Survey of India is to really create data. You need to remember that most of the infrastructure development in this country happened because of what the Survey of India did, many years ago.
Yeah.
So this is really a renaissance in a sense, and that renaissance is because of what's happened with the policy. And a company like ours is actually taking the lead in terms of developing that kind of infrastructure and content.
Short conversation today, Mr. Malik, but yeah, we'll have you back. I promise we'll have you back for a slightly longer conversation where we can get into some of this stuff in greater detail. But right now we're out of time, unfortunately. Thank you very much for your time, and great speaking with you here on CNBC TV18. Well, let's just bring in Anuj, who's here on the big wall with what he's making of the market, the trade setup. Anuj, morning.
Morning, Prashant. Well, good setup for the market. Yesterday was almost like, a dream setup for the bulls. The market respected boundaries. It made a lower low and a lower high, but still a higher close, which in itself told you that a buy on dip trade is working. Only the bank nifty is stopping the nifty from hitting a new high, and that of course has its own problems. Yesterday also we saw that big slip intraday in the bank nifty. In fact, if you look at how far the indices are from their all-time highs, the nifty is just 2% away, and the bank nifty is almost 6% away. And considering that bank nifty is almost 1/3 of the nifty, that practically explains why nifty is not at all-time high. The market leadership right now is firmly with IT and auto, and it looks like IT perhaps could be the one which could hit the next one to hit 52-week high. Trending high series normally ends at the highest point. It started at 18,857, and we have had almost 1,000-point rally on the nifty. Bond yield, dollar index, Brent all lower than yesterday, and today the US market is closed and expiry today, so it could be a field day in the second half for bulls out here. On the Nifty, the levels I'm watching out for are basically on the option writing side because expiry today. So the first support is 19,776, which is the put writers zone, and you have 19,703, which is yesterday's low as the big support. On the upside, 19,875, which is the series high, last Thursday's high as well. That's the first resistance, and on the option side, call writing zone is 19,925, so that's the level to watch out for. On the bank nifty, yesterday there was a collapse, but it still respected the 200-day moving average, rising 200-day moving average on close. That level is at 43,324. There are three levels I'm watching out for. 43,324 to begin with, the 200-day moving average, 43,234, which is yesterday's low, and I think the all-important level to watch is the trend line support. If you draw the trend line of last 1 year, that comes in at 42,800.
Okay, what stayed with me, Anuj, is that the Nifty is just 2% away from that all-time high. So we keep worrying about the here and the now, but the larger issue is that this is a raging bull market and you shouldn't... it's like a fast train, right, that has really been speeding up since October, now perhaps slowing down a bit.
Absolutely. And, Sonia, this is a market which is not just sensing new all-time high, but much higher all-time highs. And maybe... year 2024 could actually mark the start of the FIs also coming back. This year, the mid-cap index is up 33%. Nifty is up only 9%, and the bank Nifty is actually down. Next year, you could actually see a bit of a reversal of that if the FIs also return.
All right, thanks a lot for that. Well, on that optimistic note, let's take a quick break. On the other side of the break, Mitesh Thakkar, Sudarshan Sukhani join in for a quick technical check and lots more stocks coming up in a bit.
Okay, welcome back. I think we've got the pre-open coming up in about, 9 minutes or so. Mitesh Thakkar is with us with, Mitesh and Sudarshan are with us with what they're making of things. The GIFT Nifty is indicating about a 10-point higher start. Gentlemen, good morning. Sudarshan, if I can start with you, how are things looking? And, we were talking about this yesterday, how the Nifty bank seems to be diverging with whatever else the Nifty wants to do. The Nifty saw many 40, 50-point intraday dips, all got bought and we ended about 30 points higher. For the Nifty bank, off the lows, but still about a 0.5% cut by close yesterday. Your sense, Sudarshan?
Yeah, well, it's about the Nifty bank. The charts at least tell us that there is no, say, momentum on the upside. We are actually seeing lower lows in a market where the Nifty is maintaining its stance. So the Nifty bank is an avoid. Now, it's very difficult to imagine a scenario in which the Nifty can go higher and higher without the bank, but that's what's happening now. So the Nifty bank is an avoid, but the focus should be on the Nifty. The Nifty is in a narrow range for the last 5 days. Given the fact that bond markets are cheerful, the Nifty is in an uptrend. In an uptrend, normally, after a big move, the market goes into a huddle. That's exactly what the Nifty is doing. So I am a buyer in the Nifty. I'm assuming that the breakouts will happen. It may happen without the banks, that's all. So maybe it'll be a tepid breakout, but the Nifty is willing to go higher. Buy the Nifty, stay long in the Nifty, buy on dips.
All right. Stay long in the Nifty, buy the Nifty and buy on dips. Got it. Loud and clear, right? That messaging. Mitesh Thakkar is also with us. Mitesh, would you concur with this view? I mean, that has worked through the course of this year if you buy the Nifty and stay with it. But what about from here on?
That's a very different time frame to look at. Good morning. We have also had a period when the Nifty since September highs of 20,000 corrected to sub 18,800. So it depends upon what kind of time frame you're looking at. But yes, I think the good thing is that with this decline getting over in September and the up move starting, the broader trend is now slowly on the verge of turning on the upside, which means that eventually we should look at higher highs. Having said that, after this rally, since the lows which we made in the last week of October, we have kind of hit an important level around the 19,850 mark. It's a gap. It's also a pivot. And there are some historical highs which were made in the 11th and 17th of October. So I think getting past 19,850, 870 might require a bit more consolidation. And that is what we have been calling for. So the market is range in the short term. But I think if we don't break below 19,600, 550 zone, then I think there's a good chance that post this consolidation will make a new high. So in that sense, yes, still saying long broadly in the markets will work. Also is the fact that the breadth is very, very impressive. And, long trades are seeing good follow-throughs post breakouts. And therefore, I think the general idea is that it should eventually drift on the higher side.
Okay. All right. Got it. Good morning, gentlemen. Mitesh, tell us, what are your picks as well for today?
Morning, Nigel. For the day, I have all buy calls. I have a buy on Balrampur Chini, and that's a buy with a stop at 454 for a target of 480 to begin with, though I suspect a slightly stronger trend might be starting over here. Coforge is also on the buy list. Keep a stop below 55.50 here. Look for targets around 5,800. A buy on Infosys with a stop at 1440 for targets of 1495. And the final buy call is Godrej Consumer, which I would recommend buying with a stop at 993 for targets of 1040.
What about Sudarshan? What about your ideas for the day? What would it look like?
Well, TVS Motors is a buy. After that big rally, it's been in a huddle for 3-4 days. It should break on the upside. Buy with a stop under 1710. Havells had a big correction. It was a mini bear market. That seems to be getting over. So it's really a buy on dip strategy where it's breaking from a trading range on the upside. Buy Havells with a stop under 1290. Surprisingly, ACC is a short sell. I remember when ACC was one of the stars of this market. That was 20 years ago. It's a long time. But now ACC is an intraday short with a stop under 1840. And NTPC is a buy. It's going through a very decent upside rally. Buy with a stop under 249.
All right. Gentlemen, we'll take a quick commercial break. Thanks very much, Mitesh and Sudarshan, for that. We'll come back. We have the pre-open in about 4 minutes coming up. We also have an interesting conversation on the entire EMS space. Renu Baid Pugalia, Senior Vice President, Research at IIFL Institutional Equities, will join in The news, of course, from yesterday was that CG Power has filed an application with the IT Ministry seeking approval to set up a OSAT division within the company. They want to get into that line of business. Stay tuned. Conversation coming up.
Welcome back. Let's straight away go to the F&O market. Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, is joining in. Chandan, hi, good morning. What are your thoughts on the kind of up move we've seen in the Nifty so far? If you can just, succinctly tell us about the Nifty move, what you're expecting for the day, and also on individual stocks.
Good morning, Sonia. Thanks for having me. So comparatively, we have seen a strong move in the market in last 3-4 weeks. Nifty rallied by around 1,000 points slow and steady, all the way from 18,838 to 19,875 marks. And last 5-4 trading session, we have seen consolidative move, but supports are shifting higher. So we believe that momentum could continue. Overall declines are being bought, like what we noticed in last 3-4 days. So on immediate basis, we'll focus towards 19,880 marks. But for 2-3 days point of view, we are expecting this rally to extend to us 20,000 to new lifetime high of 20,222. So overall bias is positive. With support of 19,666, we can see the rally to us 20,222. But for intraday point of view, we can focus on 19,888 marks. Now looking at the Bank Nifty here, we slightly mixed. Bank Nifty underperforming. So we have to bear the range in between 43,000 to 44,000 marks. Looking at the stock wise, first trade is buy on Balrampur Chini. Here we have seen a rounding formation and consolidation breakout of last 30 days. The stock is back on track and trading at 18 months high. We have seen some sweetness back in the market in this most of the sugar stock. Some long built up, also adding further momentum. So recommending to buy on Balrampur Chini with support of 453. Here we can see a rally towards 480 plus zone. Second trading area, there is buy on Oro Pharma. Nifty Pharma Index has given a fresh breakout, and most of the pharma stocks are doing well, including Oro Pharma, Glenmark, Cipla, even selective hospital stocks are doing well. So recommending to buy on Oro Pharma as it has given fresh breakout, entered into the fresh high territory, making high tops, high bottom. So one can buy with support of 1,035. And here we are target to us 1,100 zone. Last trading idea, there is buy on Hero Moto. We believe that Nifty auto stocks are in top gear and leadership has changed. And now stocks like Hero Moto, Bajaj Auto are also doing well. Fresh breakout, momentum is clearly visible. Delivery volumes are adding. So recommending to buy on Hero Moto with support of 3340. And here we are expecting a rally to us 3550 zone.
Okay, thanks a lot for that, Chandan. Have a good day. Well, Dipan Mehta is still with us, so let's get his view on a couple of stocks now. By the way, the pre-opening rates have settled slightly lower, so down about 20 odd points. Looks like the Nifty is not going to go anywhere today. I mean, at least at the start of trade, 19,800 is holding. Dipan, there's so much talk about what's happening with Titan, right? 3 lakh crore market cap. If you had bought it 20 years ago, you would have, spent 1 lakh 20 years ago. Today, you'd be sitting at 6 crores, etc. But hindsight is always 20/20. What do you think the next Titan will be?
Oh, that's a tough one. So now next Titan. See, the thing about multi-bagger stocks, you don't know when you buy them whether they're going to be multi-baggers or not. And Titan really surprised the street from time to time. They were in the right place at the right time. So from that point of view, I don't know which is going to be the next multi-bagger stock. But, we have all these specialty retail companies, like this Manyavar, then Campus Activewear, and Metro Shoes. These are companies, which are, I would say, have a greater potential than large format retail companies. And the balance sheets are great. They have a fantastic runway for growth in terms of growing into tier 2, tier 3 cities. And at the same time, very aggressive managements, and they're perfectly riding the premiumization trend as well. So we're looking at these companies, they're expensive. And I would say that last quarter numbers also a bit disappointing because of tepid demand. But these are companies in the consumption space, which could really grow and grow manifold from these levels and provide a good secular growth for an investor. But you need to buy them when there's somewhat of margin of safety and when there's a decent correction in the stocks. because optically they appear to be quite expensive.
Okay, well, Deepan, we'll leave it there. Thank you very much. Great chat as always. Appreciate your time here on CNBC TV18. Thanks indeed. Let's focus on the announcement from yesterday. Murugappa Group company, CG Power, was locked up in upper circuit. Announcement coming through from the company that they plan to set up a OSAT facility. This is unrelated to their existing lines of businesses, but the market, of course, is sensing the opportunity is large. It's an up-and-coming space. Renu Bed Pugalia, a Senior Vice President Research at IIFL Institutional Equities, she's joining us now to talk to us about this. Renu, good morning. Good to have you with us here. First of all, Prashant here, could you tell us very simply, what is OSAT? What is this line of business? What does it mean to be in this line of business?
OSAT essentially is a part of the overall electronics value chain, and within that focuses on the rare end of the semiconductor. So once the semiconductor is prepared by the foundries, it needs to be processed, cleaned, cut, and then wired, bonded, etc., repackaged and tested for use by end users. So compared to the entire value chain, OSAT is relatively more labor intensive while equally being capital intensive in nature. So to that extent, this is where we are seeing that while India has been trying to increase the level of electronics manufacturing in the country, the second layer in terms of backward integration is to bring electronic back-end manufacturing, which is where we have seen announcements like Micron, couple of EMS companies have shown their intention to be in OSAT, and now CG Power recently, as in yesterday, announced that they want to set up this business. So it is a part of the global supply chain within the electronics part that we see here.
Okay, so this would constitute as assembly, Renu, in the overall value chain?
It is
late stage towards the end? Yeah.
Yeah, so it is assembly, cleaning, some processing, and repackaging and testing.
Okay.
So it is outsourced semiconductor assembly and testing. It is also called ATMP. In other words, in terms of assembly, testing, and packaging of semicon. So basically, the entire function of OSAT is to take the semicons which are prepared by the fabs or the foundries and make it ready for the end users to use it in their SMT lines.
Okay, and the end user would be companies like who? I mean, who would they? A company in the OSAT line would send it to? Would the final
end users? Yeah, so the eventual end users are EMS companies who will assemble and make it into PCBA format, and then thereafter use it in the end products. Could be healthcare, automotive, industrial.
Sure.
So there are vendors for this.
Okay. Now, I remember Keynes wants to get into this as well, which is another listed entity. Are there any others? And do we have a size of the opportunity here? Is there any way to kind of put together some number on that?
So overall, if we see based on industry reports, the semiconductor market in India last year was pegged at close to $27 billion. And this is expected to grow at 20% CAGR. OSAT as a market is completely new to India because we don't have any OSAT companies currently. But if you look at the type of, the nature of the business, Micron has announced $2.75 billion of capex. So in the next 12-18 months, if we see, they will ramp up to almost $2 billion plus of revenues once the factories are commissioned. So similar, the asset turns in this business typically are just about 1x or maybe between 0.8 to 1x in terms of the capital commitment. So the OSAT market in India is evolving. I think in the next 4 to 5 years, it would be again a multi-billion-dollar market in India once we have 5-7 ventures operationalized.
Now, what does this mean for CG Power as a stock, and what should investors expect, Renu?
So for CG Power, clearly it's an unrelated diversification, but they have been generating very strong cash flow from the core operations. And the group has mentioned of their initiatives and intentions to have presence in electronics value chain. So to that extent, CG becomes the front-ending vehicle to drive this initiative and entry into electronics market. Nothing better than OSAT because even if the market is highly capital intensive, it's very well tightly linked with the global supply chain. And more interestingly, Government of India is given very attractive capital subsidies. So central government is giving up to 50% capital subsidy. And state governments, depending which state government you set up the plant and facility at, they can also offer subsidies of up to almost 20-25%. So if the 70% plus of the capital cost is subsidized by government subsidies, then the overall return profile of the business looks very attractive at almost 30 times plus. So for CG Power, definitely they are sitting on a strong cash chest. From a longer term perspective, they get to play into the electronics supply chain, which will have some backward pull through in terms of their ambitions to be in the EV market and the industrial market where they're already present. But bulk of the initial volumes, what we understand, should be there for the external stakeholders and customers within the domestic market and global supply chain.
Renu, a last question. Have you been able to put together have you been able to speak with the management, put together a size of, I mean, what could this be a couple of years down the line in terms of revenue potential for CG Power, or too early?
Yeah, I think management has not clearly commented, but if we go by the global numbers and the trends of this business, based on the capex that they have announced, we think that they should be close to 5 to 6,000 crores kind of revenues over a 5-year time frame once the operations stabilize. And which also means effectively with almost 10% kind of net margins which OSAT companies tend to generate, it could generate 5 to 6 billion kind of annual steady state profits once the business matures and stabilizes.
5 to 600 crores.
Yeah, 5 to 6 billion rupees or 5 to 600 crores, whatever you want to refer.
Billion rupees. Okay, all right.
Yeah.
Okay. I thought.
Yeah.
All right, got it. Renu, great conversation. Thank you so much for explaining that to us, and appreciate you joining in. I mean, I think CG Power perhaps could be the stock of the day as well. I think the pre-open is up on us, and look at the CG Power stock, 20% yesterday, and it's up another 6% or so right now. I think it settled up 6%. In the pre-open on about 2 lakh shares in terms of volume. So just almost at about $500.
Okay, and since we're talking about stocks, right, plenty of other stocks in focus. Honasa, by the way, just pulled that up. Good numbers this time around. So Honasa, I think in pre-opening was up about 5% odd. The EBITDA margin has expanded. The profit has almost doubled for Honasa this time around. That's the big stock in focus, 10% higher in pre-opening. TVS Motor, the stock is at a fresh 52-week high as well. And a couple of other stocks that we're looking at this morning. In fact, let's get some 9-10 calls in. Sudarshan Sukhani is back with us. Sudarshan, what's the big call at 9-10?
Consider buying NTPC with a stop under 249.
Okay, and Mitesh, how about you?
I'll go with the buy on Balrampur Chini with a stop at 454 for targets of 480.
All right, Vivek is with us to talk about IEX and why you should be watching that one. There's a bull versus bear case scenario. Vivek, over to you.
Well, good morning. Interesting notes coming in on IEX, both bull case where UBS, has gone ahead, maintained their buy stance. They've increased the target price to 200 rupees from 185 rupees a share. On the other hand, Bernstein continues to have an underperform rating on the stock with a target price of just around 95. Now, what are the key points of why UBS likes IEX? Number one, they believe that the supply side bids as far as the day-ahead market is increasing. Volumes are picking up. In fact, Q3 trading volume is up 15 to 17%. They believe that this particular trend is set to sustain, and they also believe that there will now be a market shift reversal from bilateral transactions towards the exchanges. Along with that, one important trigger would be, the launch of the long duration contracts that are up to 1 year of duration. So that is also going to be an important trigger as far as IEX is concerned. On the other hand, Bernstein believes that the market coupling paper that has been launched by CERC, this could have significant long-term ramifications as far as the business model of IEX is concerned. They believe that the paper, which has been launched to debate the need and timing of market coupling of exchanges, is quite important to watch. In fact, there have been a lot of exchanges that CERC has received, and Bernstein has gone ahead and analyzed all of these exchanges. Very simply put, what Bernstein says is that BJP-run states, support coupling. On the other hand, the opposition party states actually oppose it. What is important to watch is whether market coupling comes along with MBED, which is market-based economic dispatch. And on the back of that, they continue to retain a slightly negative stance on IEX.
Okay. All right. A negative stance on IEX. Got that. Well, many other stocks in focus this morning. Piramal Pharma as well. Just take a look at that stock. There has been a very positive brokerage report coming in on Piramal Pharma. If we can just pull it up for you in a bit. Jefferies actually has a high conviction buy on Piramal Pharma with a fair value of 180 to 185 rupees. That's a big upside to the current market price. So that's another stock that perhaps you'd want to look at this morning. In fact, lots of brokerages, right? There's Adani Ports, where Goldman Sachs has raised their target price on Adani Ports to 855 rupees on the back of very strong volume growth that Adani Ports has seen. So that's another big mover in trade. CLSA has a sell call on Jubilant Foodworks with a target price of 503. So that there is some, pressure that they're seeing in the pizza space that's being challenged by new competitors. So Jubilant FoodWorks slightly in the red this morning. But as we head into the first tick on the index, just remember that this is a market where the direction has been positive. The momentum has slowed down a bit, but this the Nifty is just 2% away from all-time highs. So we're virtually at all-time highs yet again, and the buy on dips is something that has worked. This morning, global cues are also positive, but we do have the Thanksgiving holiday later, so the US markets are shut tomorrow. But here's the first tick on the index. The Nifty is up about 26 odd points. The sensex is up almost 100 points. So clocking on the green line this morning, the mid-cap index is up 124 points. Bajaj Auto is your top gainer this morning. By the way, on Bajaj Auto, my colleague Hormuz very helpfully tells us that this is Bajaj Auto's best year since 2010. It's up 60% this year, and it was up 75% way back in 2010. So it's been one of the best years that it's seen in the recent past. So keep an eye out on Bajaj Auto. Apart from that, Adani Ports, we mentioned that earlier, up 0.7%. Power Grid, Asian Paints, M&M. In fact, all auto stocks doing well this morning. M&M, Tata Motors, Eicher, Hero MotoCorp, Bajaj, all in the green right now. On the downside, Cipla, HUL, Maruti Suzuki, Ultratech Cement. By the way, mid-cap index is also opened at record highs, so looking pretty smart over there. Britannia, HDFC Bank, Kotak Mahindra Bank, just a tad bit in the red. So largely, you'd have to say all the action is now shifted to the broader markets. Take a look at Honasa and you will come to know how the market is receiving those numbers. Good set of numbers coming in for Honasa this morning, and the stock is up about 5%.
Well, that's right, Sonia. Home First Finance, Abhishek had told us, is likely to be a large trade. That's got cleared out. That stock, in fact, is under pressure post that large trade. 10% equity nearly changing hands. So that's one stock keeping an eye out on. Man Infra, well, they've announced on the exchanges a few minutes ago that they'll be meeting on November 29 to consider raising some funds. So for the time being, that stock is up close to around 10%. Will require further details out there. NMDC sources tell us here at CNBC-TV18 that they've gone ahead and they have increased prices by 200 to 300 rupees across products. So that one as well mildly higher with a gain of close to 100%. CE Info Systems, well, that's the one, Mappa India. That one, in fact, is... I think it was mildly higher in pre-open. They're considering a fundraise. In fact, it's up close to 3.5%. And Genesis, they have partnered the Survey of India for 3D digital twin mapping program in India. Yesterday, the stock was higher. Today, in fact, the stock is up only around 1.5%. A few more names that you should keep on your radar. A few stocks actually that are seeing very, very high volume moves. One is RateGain. That stock is down close to around 7%. Suzlon for another day, it's in fact low. It's down close to around 4.5%. Remember, some of these stocks have seen a big run, and now they've come for selling. Even Apollo Microsystems, the stock was up more than 40% this month. Now there's no exit actually because there's big selling out there. So that stock as well, Apollo Microsystems, that stock is down 5% and it's at lower circuit. Prashant.
Okay, well, it's not a bad open, right? I mean, 35 points or so. 19,845 is where we are at, and it's looking pretty okay. Now, just a quick few more names. CG Power, we were just highlighting that volumes are up and running, and how. CG Power is up another 5% after yesterday's 20% pop. It's the top volume traded gainer, almost 3.5 million shares on CG Power at the word go. So that's humongous. IEX, I think Vivek was mentioning IEX earlier. 3% up on IEX. Stocks at about 148. There is Man Infra, which is up 10%. It's coming up with huge volumes, Man Infra, fundraising, 175 on Man Infra. Honasa, where the management will speak with us in just a bit. I think we mentioned this, 6% higher. Results have been strong, 375 on, that's Honasa Mama Earth. Sorry, I mentioned Bajaj Auto. Of course, we had Rajiv Bajaj with us yesterday in a pretty exhaustive interview. We'll play sound bites of it later. CDSL is up about 3.5%. EID Paddy is up about 3%. There is Godrej Agrovet, which is up about 3%, and so on and so forth. I mean, it's right out of the gates. There is no doubt the volumes. Volumes are strong, and I think it's looking pretty good. Tube Investments is down 6%. It went up sharply along with CG Power and Carborundum, etc. But this morning, I think it's down 5% or so on decent volumes. And of course, I think some of the others we've already been highlighting, so I won't go into details. KEI is down about 2.5%. eClerx went up sharply yesterday. eClerx is down about 3% or so. Shanti Gears was up 8% yesterday by close. Shanti Gears is pulling back some 4%. So these are just pullbacks off of yesterday's moves that we are seeing all with decent-sized volumes right at the word go at least. Gautam Shah is with us. He's our market master today, founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Good morning. Prashant this side. You know, the Nifty has been, of the lows of October, markets have done well. But are we running into some traffic now? What's the sense? Especially this divergence with what's happening on the Nifty Bank. How will it resolve itself in your opinion?
Good morning, Prashant. Well, indeed, it's been quite a diverging market. If you look at the last couple of weeks, it's been a big global, short covering kind of a rally, because it's not just India, but every other market in the world has seen just such a smart rally, and therefore India has also been a participant. But I think the quality of this rally has really been questionable, because most of the gains have come by way of gaps. And I think intraday strength has just not been there for the index and for the large caps. And because we are living in a disconnected world for the equity markets, probably for the first time in a long, long time, you have a scenario wherein the Nifty, the Bank Nifty, and the top 100 stocks seem to be underperforming, seem to be in a phase of indecision. Whereas if you look at the broader markets, there is a lot of momentum, there is great outperformance, and obviously there is a lot of liquidity as well. So I'm not a big bull on the Nifty and the Bank Nifty. I don't think they're going to go places from current levels. I think they're just broadly going to stay in a range. 19,850 area seems to be a very important resistance. If we were to get past this number on a closing basis, there could be some uptake, but I don't think that the markets are going to easily sustain at higher levels. But I think the real opportunity is clearly in the mid caps and small caps. I think one has to play themes. One has to just forget the Nifty and the Bank Nifty, play themes: sugar, fertilizer, insurance, auto ancillary, infra, PSU. I think that's where money and wealth is being made, and that's where one should focus on.
All right, and there are plenty of themes which are working out this morning. One space that's looking pretty good is all the companies that benefit from lower crude prices, right? So today as well, JK Tyres, for example, is up almost about 3-odd%. You have something like a Berger Paints, which is up almost about 4-odd%. So all the companies that use crude as raw material, they're seeing big moves this morning on the back of that 4% fall in crude overnight. Gautam, hi, good morning. So tell us about the big trend that you see in 2024. Sectorally, stock-wise, which are the stocks that could be the leaders in the next rally?
Well, Sonia, how things have changed in the last 3 weeks. While we were at the doors of 18,800, I think the scenario was very different. And now we are at 19,800. Obviously, things have changed. People are a lot more optimistic. Now, it remains to be seen how this pans out, because between now and, say, May 24, we do have a lot of headwinds. We do have events to look forward to. So I don't think the index is likely to do anything special. You broadly stay in a large range where you keep finding supply at high levels and you keep finding support at lower levels, given the liquidity angle and India's outperformance, in the global equity basket. However, having said that, in terms of themes, I think over the next 3 to 6 months, IT and pharma are very big themes. I think IT has seen a good comeback in the recent past, and I do see great upside, maybe 15 to 20% upside on the index. Pharma, as we speak, is at lifetime highs and still looks excellent on the charts. Most of these top line stocks, I think, could see anywhere between 10 to 20%. And mind you, these are the kind of returns which I don't see on the main headline indices, the Nifty and the Bank Nifty. So IT, pharma, auto, and PSU, which continues to be an existing theme, I feel would be the star performers between now and, say, May 24.
Okay, all right. Hi, Gautam. Just give me a minute. I just want to focus on a couple of stocks. Suzlon, the stock that we were talking about, was down close to 4.5%. That's done a U-turn, and that's a big volume spike that we've seen out there. So that one as well should come up for you. Railtel as well, suddenly that stock as well has spiked up. So a few of these names, they are moving higher, and they're moving with good amount of momentum. Well, Gautam, you were talking about 19,850 and that being a crucial mark. For the time being, we're holding above those levels. So if we breach this mark and we sustain over here, last week's high was 19,875. Where do we go? And till when does this uptrend intact? I mean, on the downside, what's the level we look at on the Nifty?
See, on the downside, very clearly, 19,450, 500 has become a short-term base. So till we are above this number, I think the bulls have some control over the market. So I think that could be used as a trailing stop loss for traders or for positional investors. But I think 850 clearly on a closing basis, 850, 870 area broadly is a very important marker level based on number of technical studies, the moving averages, the trend line, the patterns that we follow. And if we do get past the same, then I think the bulls will consider themselves lucky to possibly take this market back to the previous highs. But as I said, these are days wherein we don't even look at the Nifty and the Bank Nifty, because my bigger problem is that there is no contribution from the large caps. If you look at Reliance, HDFC Bank, ICICI Bank, ITC, L&T, these are some of these big names which haven't participated in this 1,000-point rally. So the breadth among the top names hasn't been all that great. And that's probably the reason I feel that till the Bank Nifty itself does not start to do well and outperform and start trading above 500, I don't think the Nifty is going to do anything special.
Okay, you said auto, pharma, IT, right? These are a couple of spaces that you like, auto ancillaries as well, till May of 2024. But some of these spaces like autos have rallied so much. I mean, we were just talking about how Bajaj Auto, TVS Motor have seen their highest gains in over a decade, right, in a single year. Do you think there is still more scope for them to build on to these gains?
I think there is a lot of scope even from current levels. We have seen a lot of rotational correction in the market. This is very unlike 2003, 2007, when the markets got into a corrective phase. What happened was everything fell for the time being because the Indian markets was driven by foreign money. And now because it is driven by domestic liquidity and domestic money, sticky money, what's happening is that wherever any pocket turns overbought, it goes through a correction just for the short term, whereas the other part of the market is strong. But coming back to your point on auto, I think even currently, if you see, there are certain stocks which still stand out. While Bajaj Auto has clearly been the star performer, I just get the feeling that some newer stocks might join the party. So a Maruti can do very, very well from here. A Hero Moto seems to be coming out of 12-15 months of underperformance. That's a stock, which could potentially be a dark horse over the next 6 to 12 months.
Oh, okay. That's Hero MotoCorp. Got it. It has been actually a big underperformer. There's not too much of a technical history for many of these names, but some of these new age businesses, new listings have done pretty well, right? Honasa, of course, is the latest one. Perhaps it still needs to prove itself. But some of the others have also come back in a big way, whether it's Zomato, whether it's Nykaa, not so much. But from this entire lot, does anything stand out for you technically?
One and only, Sonia, that's Zomato. I think we've been a big bull on it for many months now. And I do believe from a technical and from a fundamental standpoint, and given the kind of institutional action that it's seeing, it's probably one name that could continue to do well over the next 6 to 12 months. So we remain very, very positive there. Among the other businesses, you need to be a little careful because I think, everything is being written with the same pen. And I don't think that's the correct way to look at the markets. But even if you look at the small cap and the mid cap space, there are so many stocks which did nothing for a decade and now seems to be breaking out. Look at real estate, did nothing for 10 years. And as the breakout has happened, look at DLF, Oberoi, Prestige, Brigade. I think this is a structural story that will continue. Fertilizer is another space that we like. So I think the top stocks like Chambal could do something special. And with Tesla's entry into India, I think auto ancillary could be a very interesting space as well. So we are watching that closely. And insurance, as a basket hasn't been doing well for the last couple of years. It just seems that the time is right for stocks like SDFC Life, ICICI Lombard, SBI Life to see a special move over the next 6 to 12 months.
Okay, all right. Well, another important factor from an Indian market perspective, Gautam, is crude oil prices. And we are happy to see that in the last 45 days, Brent crude has corrected from about $97 per barrel to around $80 per barrel. How is it looking on the charts? Where do you see this one headed?
Well, Nigel, who would have thought? I think we lived in a world of serious geopolitical concerns. And typically, if you looked at history, you would have expected crude to actually inch towards 3 figures. But then it's seen this drop. And that's the kind of world that we are in right now. I don't see much downside. Yes, it's been a bit of a dip, but I think NYMEX crude somewhere around this 70 to 75 zone, should find solid support. So broadly, 70, 90 is the sort of range that it's going to trade in. But the bigger trade for me over the next 1 year, and I've been maintaining this stance, is gold and silver. I see gold and silver breaking out and challenging equity market index returns over the next 1 year. I wouldn't be surprised if gold takes out 2070 and moves towards 23, 2400, and silver eventually in international terms goes towards 28, 29. So that's where, we are quite positive, and we would recommend your viewers to top up as well.
You would recommend our viewers to top up as well. Is the for equity indices, Gautam, is the road clear in the MSCI World Index, etc.? How are things looking there?
The world is not too clear. It's quite hazy. In fact, if you look at the MSCI World Index, MSCI Emerging Market Index, or the developed world, it's just that this 2-week long snapback rally that we've seen, it's giving everybody the feel that everything is, well in this world, because yields have cooled off, inflation has cooled off, the fundamental triggers that people are talking about. But I don't think it's as rosy as it seems in terms of price action. So I think indices around the world will remain a little challenging, but I think the real opportunity, not just in India, but world over, is in themes and in stocks. I think that's the world that we are going to see over the next 6 to 12 months.
All right. We'll let you go on that note. Thanks a lot, Gautam. Always great speaking with you. Thanks for joining us on the channel. That's Goldilocks Premium Research. Very optimistic on the market. By the way, he was saying one big theme that everyone should be looking at is the auto ancillary space. And that has been doing really well. Uno Minda is on our radar now. Q2 was very strong for the company. It reported its highest ever quarterly revenues and strong growth in the domestic volumes. It's growing its electric vehicle business as well. Sunil Bora, the Group Chief Financial Officer at Uno Minda, joins us now to discuss their business outlook. Sunil, thanks a lot for joining us. At the analyst call, you folks were mentioning that the domestic volumes have seen a 14% growth quarter on quarter. So demand continues to be very strong. But I'm just trying to understand, this double-digit mid-teens volume growth, is it something that is sustainable in the second half of the year as well?
Sonia, as you know, it's very difficult to say whether volumes will continue, but current momentum, I can say that it has maintained, because after the festive season, we know that the marriage season has kicked in, and that has kept the demand momentum. Also, this year, the festive season also was a little bit delayed compared to last year. So if you factor that, actually, Q3 over last Q3, we are expecting significant improvement. And as far as H2 of the rest of the year goes, yes, we are pretty confident that from our perspective, we do expect the kind of growth momentum we have built in past few quarters to continue in Q3 and Q4 as well.
So when you say momentum that you've built will continue in Q3 and Q4, I don't want a number from you, but just trying to understand that this 14-15% growth in the volumes is something that you can replicate, or can you even do better than that? Because, a lot of the other businesses, a lot of EV-related businesses are picking up now.
No, Surya, we can definitely do better than what we have delivered. We are consistently building our capacities, but as you know, that our 90% of revenues is linked to the industry volumes or the OEMs. So whatever the industry volumes, we have to serve it. And our B2C segment, which is our aftermarket, is just 8 to 9%. So from that perspective, we have been consistently building our capacities. And in case there is any volume uptick or whatever industry needs, we are fully geared up to meet that demand.
All right. Hi, Sunil. Good to see you in after a while. Well, EV is the key focus, right? And there have been so many JVs. It's getting a little bit competitive as well. So I just want to focus on this aspect. Point number one, how much of R&D, how much of CapEx are you planning on putting into the EV segment for this fiscal year? And also, what kind of revenue ramp-up can we see from the EV segment for FY24 as well as FY25?
Yeah. So in terms of CapEx investment, as you know that the board has approved investing almost close to 600 crores in the EV businesses, be it the JV with Frevo or the JV with the Buller Motor for EV motors, also some of the EV business which we are doing as part of our controller division. So there has been a lot of EV specific business on top of it, as you rightly mentioned. If you look at only pure EV segment, so a lot of our businesses are actually agnostic to either IC engine or EV engine. From that perspective, we have been able to maintain or even actually improve some of the segments, our market share, when we move from IC to EV. So from the EV revenue perspective for FY24 and FY25, we do expect that this year, if you see, we have built a lot of new businesses. And if I see our total revenue build-up, obviously the question mark always is the industry volume. So based on whatever volumes our customers have guided us and based on which we are building our capacities, in FY27, FY26, we are expecting the total EV revenue segment to be almost like 2,500 to 3,000 crores, which includes both EV components, specific EV components, and also the components which are agnostic to EV.
One sec, just one clarification here. In the sales to two-wheeler EVs was about 300 crores in the first half of the year, right? So going by
Yes.
that run rate, you will finish at about 600 crores this year, the sales to two-wheeler EVs. So will you be able to do, you said by the end of FY26, you're planning to do over 2,500 crores, is that correct?
Yes, that's right, Sonia.
That's a huge jump up compared to 600 crores that you'll finish by the end of this year.
Yeah, because this what you are talking 600 is only two-wheeler segment. We are also present in the some of the components in the EV three-wheeler segment and also EV four-wheeler segment. So what I am saying is overall revenue from the EV segment, it is not only EV two-wheeler. That's number one. And number two, there are also a lot of new products which are getting into production as we move forward. Like the EV motors, while the plant has been ready for commissioning, it will start production only in the last quarter of the fiscal, and then you will see the volume ramp up. There are a lot of businesses which are in the pipeline. We have secured a lot of new businesses, as we say, which will get into SOP only in line with when our customer actually launches the vehicle. So there is no point in producing today and keeping in the inventory. So the production will happen only in line with when the launches are there, and that is expected to be in FY25 and something is also in FY26. So in addition to the volume ramp up, you'll also see a lot of new product addition, which will happen in the next 12 to 18 months.
Sunil, hi, morning. Prashant here. Just two questions. One, you said many of your components are agnostic, EV, ICE. Value-wise, what is that? How much would you put it down to the agnostic bit?
Yeah, so if you see our total order book, so EV specific components, and if you refer to our last quarter presentation, EV specific components is something around 1,700 odd crores. 1,700. And 1,300 odd crores is the engine agnostic component. So total order book from the entire EV segment is almost like 3,000 crores, which is the annual value. We never talk about the cumulative value because it all depends on the product life cycle. So this is the annual peak value we are expecting based on the volumes which our customers have guided us.
Okay. Sunil, just one more question from me. Globally, I mean, so looking at some data a few weeks ago, have things for some reason slowed down a little bit? Could be just cyclical in terms of EV penetration in many parts of the world? And if yes, I mean, what's going on?
Difficult to say only from EV. Yes, there has been some analysts commenting on the delay in some of the countries in terms of EV adoption. But even if we take a step back, there has actually been some volume impact in our exports. But because we have been able to put more products into the export region, we have been able to grow our exports. But if you see apple to apple, what we have been planning versus what it is, actually volumes are a bit softer in the developed world. But as I said, because of the new product addition, be it in the switching segment, in the seating segment, we are putting a lot of focus on our exports, and that has been able to more than offset the softness in the industry. So from that perspective, we are trying to sort of maintain our export pie also as part of the total revenue.
Here in India, for example, companies like Bajaj, etc., when we speak to them, they say that after the phasing out of the FAME subsidies, sales have become stagnant. So here also, I mean, it's a longer-term trend, but at this point in time, looks like we're running into some headwinds, a little bit of slowdown.
Absolutely, Prashant. If you see the EV penetration in Q1 versus Q2, because the subsidies were sort of reduced in June. So the EV penetration in two-wheeler segment specifically, if you talk about, was roughly around 4% in Q1, which sort of softened to sub 3-point-something percentage in Q2. So there has been a little bit of impact. It can also be because of a lot of pre-buying also happened because government had announced the reduction in the incentives or the subsidies. So there has been some pre-buying also which happened in Q1. So we have to see what are the numbers in Q3 and Q4 to actually conclude whether actually there is a significant softness in the demand or it's a temporary phase.
Okay. On the margins, your first half FY24 margins ended flat at about 10.9%. Given that there are plant additions, there are some new product additions, some costs are getting added as well, do you think that could put a little pressure on your margins in the second half, or will you continue to maintain it in this band of 10-11%?
So we continue to maintain the band, Sonia. So we actually have been conscious before we guided at the beginning of the year in terms of our annual margins. And whatever new plants currently are being sort of commissioned or are in the process of ramp up, the impact of that has been factored in these numbers.
Okay, so continue to maintain the margin band at 11%. Got it. I just had, since we're talking about margins, right, wanted to check on Kosei Minda, which you recently got full control of. What's the target over there in terms of growth as well as margins? And secondly, Minda Kyuraku as well. Last year, we saw significant margin contraction over there. Any kind of improvement that you've seen in the first half of the year?
No, absolutely, Sonia. So if you see, Kosei Minda was into losses for past few years, if you see the financials. And our first focus has been to turn around the business, do the operational improvements, do the capex what the business needs in terms of stabilization, in terms of reducing cost of production, and we are happy to say that the trend has been positive, and we are expecting to be EBITDA positive in this quarter itself, and going forward next year we are expecting to be PBT positive. As far as Minda Kyuraku goes, yes, there also we have had some businesses which has been taken at a very, very competitive prices, which has impacted the margins. So there also the financial situation has actually improved compared to last year. But if I see quarter to quarter, we are expecting Q4 to be sort of PBT neutral or PBT positive. And next year, when we move on, to be significantly better than this year. So on both the businesses fronts, there have been significant improvement in the operational and the financial parameters.
Always good speaking to you, Sunil. Thanks so much for stopping by and giving us all of those details. I look forward to having a chat with you in the coming month as well. For the time being, though, we'll slip into a short break. When we come back, we'll turn our attention to Honasa Consumer. Well, they reported their numbers, which looked quite good. Welcome back. Well, let's get straight to the discussion on Honasa Consumer. The up closer around 10%. There was a bit of an intraday dip that's got bought into. Varun Alagh, the chairman at Honasa Consumer, joins us on the show. Varun, good morning and congratulations on a good showing in the past quarter. Well, plenty of valuations. And at the IPO, you had said that you believe it's fair. And for the time being, that's proving right. The question is, what's the way ahead? Because top-line growth has been good. Though on margins, you have mentioned that there is scope for improvement. So give us a rough number in comparison to what you did in the first half of the year. What kind of margin improvement are we looking at? And add cost as a percentage of your sales, well, that's come down to around 35%. Do you see that number dipping further? If yes, by how much?
Hi, thank you for having me on the show. So from a perspective of the way we have seen the business in the past, and we clearly see that as brands grow in scale, and there are structural efficiencies which come across marketing and the leverage that comes in, because as the brand awareness increases, and the need for similar level marketing decreases, then in percentage it keeps going down. And we've also seen OPEX leverage kicking in. And as we go forward, of course, in the short term, things would be very similar to what they have been in the past. And but from a medium and long term perspective, I think our endeavor would be to keep looking for more opportunities on how, while we continue to grow faster than the market, and how we can find more opportunities of efficiency and leverage. And we'll keep working on the same.
Varun, you've said that before as well. You're looking at operating leverage, you're looking at growth, looking at outbeating the industry growth. That's very, very good. We're trying for a couple of quantitative numbers. So in terms of an improvement on the margin front, say by FY25, you don't want to give us for FY24, how do you see that number move? Can you see 100, 200 basis points improvement? And also on the ad spends, it's come down from around 40% to around 35%. And you told us about that as well. Do you see it dipping further? If yes, what will be the ideal number out there? Some quantitative details.
I wish I could give you a quantitative outcome. And of course, like I mentioned, that the objective here onwards would be to get better each year, and while continuing to grow faster than the industry. And like you rightly mentioned, the largest component of that getting better or that efficiency or leverage that we see happening even in the next year or the next 2 years, right, will come from the A&P leverage, right? And we are very confident that will continue to sort of, help the company become more efficient.
Varun, hi, good morning. Prashant here. I think the stock market's excited to see you because as we are in conversation with you, the stock has moved up a few percentage points. It's up 15-16% now, so that's a very strong reaction to a strong set of numbers. Can you break this down, the result that you've posted, volume growth across brands? Where have you seen the maximum growth? Does it come from new brands, older brands, and what's the outlook? Really?
Honestly, the entire growth is actually volume driven. Right? If you look at our half one, right, our value and volume growth is both at that 33-34% mark. Right? Across brands, if you look at, of course, Mamaearth is our largest brand and continues to grow very strongly compared to the industry and other large brands out there. Right? But our younger brands have also demonstrated very disruptive growth. Right? The Derma Company, which is our second brand, which is just 3.5 years old, is already at a 380 crore ARR. Right? Aqualogica, which is less than 2 years old, right, is hit a 180 crore ARR. Dr. Sheth, which we had acquired last year, and we've actually grown the brand 30 times, and that has also entered a 150 crore club. And I think not many companies have been able to demonstrate the ability to scale and build brands at the pace and time that we have demonstrated. Right? And that gives us a lot of confidence on not just being able to scale these brands into much larger outcomes, but being able to do that on more brands as well.
Sure. I think that's what the street likes, 16% higher now. So you're clearly the lucky charm here. But Varun, good morning. By the way, overall your growth rate, just to get that out of the way, has been 33% in the first half of the year. Is this 30% plus growth rate sustainable in the second half as well on the top line?
That's our endeavor.
Okay, got it. So 30% plus growth rate sustainable in the second half of the year as well. Can you tell us from the offline market now, what is your share and what is the target over the next couple of years?
I think that's an area where we're still very young. And it's only been 3.5 years that we've started sort of expanding in offline. And we currently, of course, about 35% of our revenues come from offline. And it is amongst the fastest growing channels for us. And we're there in only about 150,000 stores in the country today. And I think there is a lot more distribution expansion opportunity, a lot more that we can do by just going deeper with our modern trade customers, and even opening more EBOs. Right? So on all three fronts, we will continue to double down.
Varun, the street also likes the fact, as you mentioned with Dr. Seth, you all bought that business and then I think it's grown 25-30 times odd. And now it's entered the 150 crore club. So inorganic growth will be interesting because you all have the ability and you all have proved that. And you all are sitting on a good amount of cash as well. So can we hear something on the inorganic growth front in the second half of this fiscal? You're scouting, you've said yes, you're always on the lookout. But can we hear about something? And if yes, what could the potential size be?
So I would say two things. One, priority for us when we see any consumer white space, right, is to still attack it organically by actually crafting our own brands, because we have clearly demonstrated our ability to craft and scale brands. Right? That said, if we come across good brand mixes, which we believe we can grow much faster, right, we are going to look at them as well. Right? Ideally, beautiful brand mix, but not too large, right, is a better place to be as we evaluate them.
Varun, one of the risks which there was a analyst note which was published, Jefferies had initiated coverage a few weeks ago. One of the risks they had highlighted is that between 40 and 60% of your revenues over the last 3 years that you've generated have come from brands which sort of you launched in that same year. I mean, so they are from new products, new brands. So which means that you have to continuously innovate and put put together new brands and then launch them, push it to the market, etc. How do you respond to that, and how should investors read that?
So let me just correct that understanding. Right? What that referred to was our innovation-led growth. Right? And that's not just about new brands, right? But innovating within our current brands, more importantly, right? Is what has led to and has been one of the core drivers of growth. Right? As a company, we very strongly believe that consumer out there is looking for newer, better innovations and evolutions. Right? Companies and brands that are able to serve those needs, right, will actually gain, in the longer term. Right? And we have built a company which has ability to do that. Right? So I think that's our core DNA. We will continue to innovate and provide the right products to our consumers. Right? Even in H1, 13% of our revenues have been delivered through innovations that we have done. Right? So I think that's a continuous core capability of the company, and we'll keep driving that to delight our consumers.
Got it. In fact, I've been a personal user of both Dermaco and Aqualogica, and I must say you all are doing exceptionally well in that space. But these new products, right, currently I think it contributes about 13% in the first half of the year. How much do you see new products contribute to your business over, say, the next 1 year or so?
So the thing with us is that for innovations, every year is a new benchmark and a new year, right? Every year we have to look at consumer trends, what are the consumer needs. We have a lot of data crunching that we do to understand what kind of products would the consumers love, right? And we provide those products to them, right? So it's not just about what we have launched this year and how that will do next year. Of course, that is going to grow, right? But we're already all our teams are working on, going to all the markets in the world as well, studying all the Indian data and consumers, right? To figure out what are the right products to offer them in the next calendar year, which can attract their attention. So I think, like I said, it's an absolute ongoing, capability for us, right? Which we rely on every year to actually deliver delight to consumers.
All right, Varun, thanks so much for stopping by, and congratulations to you as well as the team on delivery of these, results. I've got 2 little babies at home, so you know which products I'm using. But last evening, I saw on social media as well, you'll put out a video of the maintaining, work-life balance. So good on you. I think employees will be happy. You're happy today, and shareholders are happy as well with what you had to say, because as we speak, the stock is at the high point of the day, up 18%.
So what's the trick to maintain work-life balance?
We'll discuss that off the record.
All right, well, more on that later, coming up with Nigel. Well, 18% higher, you got Honasa flying away and looking very, very strong. Raymond is the next company that we're focusing on. The stock will come up on your screen, and maybe we should look at the price on Raymond over the last maybe 2 weeks or so. From 1900 levels, the stock's come down to about 1680 or so. Raymond, the company seems to be caught in the Gautam Singhania and Nawaz Modi fire, so as to speak. To bring you quickly up to speed, Gautam Singhania announced separation from his wife, Nawaz, on the 13th of November. And the latest news flow, Nawaz Modi has claimed that she's been expelled from Raymond and has claimed 75% of Gautam Singhania's assets for herself and, of course, her daughters. What do these developments mean for the company Raymond, and what will the board and investors look at? Are institutional investors likely to get involved? So let's talk about this. Hetal Dalal is President and Chief Operating Officer of Institutional Advisory Services to take us through some of this. Hetal, good to have you with us here. Good morning. It's a unpleasant saga which is playing out. And of course, it's tough to miss. It's now kind of coming out in the open. Lots of outlets reporting on it. What is your first reading from a investor listed company point of view? Will the board get involved? Should the board get involved? Go on.
So thank you, Prashant, for having me. But these are unfortunate circumstances. Nawaz Modi has accused Gautam Singhania of domestic violence, and that has resulted in impact on the stock price. Now, if you see what she claims is all of this started in September. These events took place in September. We are now in November. The board has been silent till now. You could argue that there was a reason to be silent, right? It's a personal matter, the daughters are involved, it's a woman involved, so therefore discretion is required and therefore the board to be silent. That's one argument to make, but we don't really know what the board has done or is thinking at this stage. I think now that has begun to impact the stock price, it is incumbent upon the board to provide clarity on what is the way forward and what they're seeing. See, at a very basic, the board now needs to at least provide some kind of assurance to shareholders that despite all of this happening, the company is still under reasonable control. Being silent is no longer going to help. So I would argue that at this stage, given that all of this has become public, Nawaz Modi's gone public with these accusations, it has impacted the stock price. It is all the more incumbent upon the board to articulate what it has done in terms of an action and allay some of the fears that the market seems to have given this entire acrimonious situation.
Way or form could that be, Hital? I mean, what could the board do? I mean, could it ask for an explanation from Gautam Singhania? Could it order some sort of an inquiry? I mean, is the board well within its rights to do so?
See, I mean, ideally to look at the situation, the board should run an independent investigation. It should ascertain what the facts are, whether, what Nawaz Modi is now talking about, there are legs to it and there is a factual basis for all of it, what actually transpired. Based on that, they have to then decide what is the course of action. Now, they have a couple of questions to answer. One is to say that, is this necessarily in line with the company's code of conduct? Are they able to disassociate the brand? Assuming this is true, are they able to disassociate the brand from the problem? Third is, at what is the action or consequences of such behavior, assuming that this behavior is true. So it's not an easy task for the board, but at the end of the day, there has to be a kind of action that the board will take, which will also be a signal to the market in terms of what is considered acceptable behavior and where does the board draw the line.
Hi, Hital. Good morning. Nigel on this side. Good to have you in. Hital, could it be possible that the board takes a decision that, till the dust clears out, or because, the lady in question has claimed that, she's been ill-treated, could they ask Mr. Singhania, you step aside for now, and till everything clears out, then you come back? Is that something that the board can consider?
Ideally, without an investigation, taking one side is really not necessarily the best way to go. I mean, board could ask both of them, for that matter, to step aside and say that, put in an interim CEO until their entire dust settles. To take it on to one side and simply say Nawaz Modi should step down or, set aside without the other side of the implication, I think is a bit unfair, or at least jumping to conclusions. But I do agree that given the current situation, there is likely to be a concern in terms of the efficacy and smoothness with which the board will function or board meetings will be conducted and function. So I think this is far more complicated in terms of, it's not isolated in terms of saying that this is a domestic matter. It's clearly reached the company and both of them are on the board. So therefore, the board needs to step in. Logically, yes, maybe the board decide both of them take some time off, so to speak, and they figure out how to settle this matter and therefore separate the company from the public.
All right. Hital, when we talk about what the board could do, this is also the promoter, the person in question is the promoter plus the operational head in that sense, right?
Yeah.
So it would have been different if it was just the sort of professional CEO who was perhaps under the scanner about what this was all about. So does that kind of change things, how one needs to assess the situation? The fact that this is the promoter we're talking about.
It does. Look, in India, at least our experience has been that boards tend to be a little bit more easy with promoters than they are with professionals. But having said that, let's separate the two, right? If you separate the ownership from the management and say that he is effectively the CEO, then you have to ask two questions. Is he a hands-on CEO who goes to the plant every 3 days and knows the names of all the workers and all the supervisors? Then yes, it's a little bit more difficult to look at an interim position. But if he's a strategic head providing broad guidance, there are a bunch of professionals who are managing the business on a day-to-day basis, then the decision is a little less complicated than otherwise. But the fact that he is a promoter does complicate matters, and it is now for boards to therefore step up and say that these are the that this is where they will draw the line based on their sort of investigation. See, and companies go through this whole dispute, right? Whether it is a divorce, whether it's like legacy issues, whether siblings are fighting, family is fighting. There are three things which tend to happen. One is that all of this becomes a distraction for the CEO, assuming the CEO is the promoter. The second is that there is effectively some kind of a separation, some kind of parting of voting rights, and that changes the voting pattern. And the third is it could effectively change the risk appetite of the CEO after a split. So it is definitely complicated. There is a divorce on the anvil, and therefore there is this entire situation will drag out for a little bit longer than we expect, is what we think.
Well put and well explained, Hetal. We'll sort of leave it at that for now, but this is something which we will keep coming back to and discuss this with you as the story develops and the situation develops. Thank you very much, Hetal, for joining us and providing some clarity on what may happen from here for viewers who are watching, for stockholders and Raymond, etc. Well, 35 points on the Nifty. We're at about 19,845. So things are looking quite okay. I mean, just maybe with 1 hour done, almost 1 hour done, market breadth is positive. 1,140 stocks are higher and about 940 stocks are lower. So it's not a big gap or anything, but it's looking good. And just one word on Honasa, which is now actually locked up. It's limit up, 20% on Honasa. We just had the management of the company with us, and the stock's up $70, 424 on Honasa. That's also coming up as one of the large volume traded names. I mean, actually, it is the largest volume traded name with what it is doing on the price as well. We'll come back. Mitesh will be with us for a quick technical check on the market. Stay tuned. More coming up.
Welcome back. Well, for now, the market is, it's actually not bad. The index may look flat, but there are plenty of stocks which are moving around quite a bit. The auto space is really on fire this afternoon on the this morning on the upside. So something like a Bajaj Auto is up almost about 3% now. The management was very optimistic yesterday. More on that later. But Mitesh Thakkar is also joining in now to, to give us more details on all that he's looking at. Mitesh, first on Bajaj Auto, any thoughts? It's at 5,900 now, new high over there. Any more technical levels that you're watching out for on the upside, and what else?
Yeah, actually, Bajaj Auto, I think, has met all the targets which we had listed. I think, the stock has actually surpassed them. Well, the only thing I can suggest is keep your stop loss at about 56.75 and, try to hold the stock. No idea where the target should be. So till a reversal happens, it will be very difficult to make a fresh view or a comment on the stock chart. But that about the stocks which I'm tracking right now, I have a buy on Quest Corp, very strong breakout taking place over there. So buy here with a stop at about 504 and a target of around 550 can be looked at. And the other one which I like is UPL, which I would recommend buying with a stop at 560 for targets of around 590.
Okay, thanks a lot for that. Well, now let's get you an exclusive. Bajaj Auto, as we told you, is one of the big stocks that's moving around. The CEO, Rajiv Bajaj, has said that the company hopes to launch the world's first CNG two-wheeler in 2025. Speaking to my colleague Parikshit Luthra, he said that the company expects the sales of Triumph bikes to double to 18,000 units in the third quarter. Bajaj Auto and UK's Triumph Motorcycles have entered into a partnership to manufacture premium bikes. Bajaj also said that the two-wheeler industry has not bounced back from the pre-COVID levels just yet, and the sector suffered from over-regulation and taxation. Listen.
We are taken a little bit by surprise, I must admit. We had prepared ourselves for 5,000 a month because, primarily the market leader there, Royal Enfield, is a very tall and very deep brand. All of us have tried over and over again in recent years, but nobody's really been able to make an impact. So our initial capacity, as I had shared with you previously, was for 5,000 a month. And yes, last quarter we have done, I think, 8,000 totally. This quarter, I think we should more than double that to about 18,000, which means an average of 6,000. So out of a capacity of 5,000 a month, we will hopefully be able to squeeze out 6,000 Triumphs on an average every month this quarter. I guess the next logical step for Chetak is, I would say, 20,000 a month for let's say 20% share. So 2020 should be the next stop for Chetak. We have again an exclusive network for Chetak, and we have to grow that network, and we are working on that. There are still some large markets where we are underrepresented, and finally there has to be excitement for the consumer. I'm happy to say that very soon, by which I mean as soon as perhaps next month, you will see some new products in the marketplace under the Chetak brand. We are in very early stages of the game. So what I'm prepared to say today is that this is not something we are about to launch, in this year or something like that. But I'm prepared to say that within the calendar year 25, which means within the next 2 years, we would certainly hope. I would not say we have decided to, but we are very hopeful of launching this motorcycle. And let me tell you why primarily, Parikshit. There doesn't exist a CNG two-wheeler in the world today, to the best of my knowledge, unless, there is some jugaad stuff happening somewhere, as there is in India also. I am told people retrofit. Our industry and two-wheelers in this country has really suffered in recent times, not so much, because of the COVID lockdown, not so much because of commodity price increases, not so much because of the chips and chip shortage, as it has for the fact that it is over-regulated and over-taxed.
Okay, I think over-regulation and over-taxation has been a concern for the two-wheeler market for a while. And, Bajaj Auto stating that, and also talking about the big plans in their own business. But let's get back to some of the other stocks. Cipla is in focus. Vivek is here to give us the latest on that. Vivek, what are you picking up?
Well, absolutely. Now, Cipla is, one of the top drags as far as the market is concerned today. What's actually happened is that, remember, on November 18th, the company informed the exchanges that they had received a warning letter from the US FDA for the Pithampur unit. Yesterday, the US FDA uploaded the warning letter to the website, and post analysis of that, it does appear as though some of the observations in the warning letter are quite serious, and this is what is dragging the stock lower. Let's have a look at some of the key highlights of the warning letter. Number one, the US FDA has highlighted that data integrity issues persist as far as this particular facility is concerned. They've spoken about issues both in product compliance as well as microbial contamination. The second point that they've highlighted is that both Pithampur as well as Goa are seeing similar as well as repeat observations from previous inspections. Remember, even the Goa facility is now under the warning letter. And thirdly, the US FDA has gone ahead and advised Cipla to go ahead and onboard third-party consultants to address these issues. Now, when you're talking about the timeline of events as far as Pithampur is concerned, remember, February 2023, the US FDA inspected this particular facility, issued 8 observations, and then classified the facility as an official action indicated, which had given an inkling to analysts saying that, this particular site or this particular facility could be come under the warning letter. Now, going forward, this is a bit of a setback to Cipla. Remember, 2 important products, generic Advair as well as generic Abrixon, are both delayed. So these launches could be pushed out to FY25. And along with that, it remains to be seen whether there is any escalation of worries or of the status at Pithampur itself. It's a significant contributor to the US revenues for the company.
All right, we'll take a quick break on that note. On the other side of the break, our special segment, Indianomics, Lata will get chatting with Santanu Sengupta of Goldman Sachs to discuss their latest report of the Indian market. Stay tuned.